Hello traders, Sid here with another weekly watch list video. So the cat is out of the bag, and now we know that the Fed decided to go with the 75-point rate hike. Now this is a desperate measure taken by the Fed to control the runaway inflation. Now at this point the picture is very clear and we are heading towards a recession. Once we get the GDP number on 28th July, if those numbers are negative, then we are officially in the recession. But you just don't need those official number to show up. You can already see that we are at the edge of that recession. Now all things pointing towards one thing, and that is more bloodbath in the stock market. If you want to buy a stock, then I highly recommend you guys to wait until the dust settles. As I said in my previous video, see if the consolidation starts forming and a market holds that level for an extended period of time. At that point you can be assured that okay, this is the bottom and from here everything will go up. Until then, please do not try to catch the bottom. We are in a bear market. We are going to get even worse. So that being said, let's start with our watch list with some major indices. Starting with the Nasdaq. Nasdaq got a perfect rejection from 0.382 level from 11,786, but since stochastic and RSI are turning bullish, it is highly possible that either we will get some kind of like a bull rally which might be lived for a short period of time, or we get consolidation. If we get a bull rally, then watch out for 1200 level, as it will be a major level to break. Moving on to ES, expect a possible bounce from 3600 or 3550 to 3856. Now any further move from there will be considered as like a heavy resistance move, because as it will progress towards 4000 level, it will get more resistance on its way. So probability of it rejecting in between that level and heading down to make another lower low is high. Next one is Russell. Now Russell gap down towards its support zone, and I think it will consolidate there for a while before retesting previous lows of 170, like right around here. It will move up, test it over here, and then reject back down. Moving on to XLE, as I mentioned in the previous video, we got that anticipated pullback from the 93, and now it will bounce from the lower trend line support of this megaphone. Expect a move towards 80 going into next week. Next one is XLV. Now healthcare sector took a beating with rest of the stock market, but bounced from 118. Now this one has a potential for the good move, as it has two consecutive gaps to fill if it start heading towards this 128, and this is kind of like a heavy resistance zone. Before reaching over here, it might get rejected from 125 itself, because the previous support might turn into a resistance and it will push XLV more towards 118, 115 once again. XOP, the oil sector has beaten down a lot, but it can hold 124 level, then it can easily move towards 130, 140. Okay, this is the level that I'm talking about. We need to hold this. Here we had prior support, so maybe we get a bounce from that and reaching towards 142. But just remember that we have this chop zone. That means here either it can reach to that point, consolidate over there, then move higher, or it can just consolidate over there and break down. Let's see what's going to happen. So those were the major indices. I covered all of them, which has a good setup and possibly play out next week. So now let's move on to the stock. Now the first one is Apple. Expect a small bull run towards 140, but nothing more than that. You guys can clearly see we broke that 130 support on Thursday, but we get some bounce back, and as you guys can see, stochastic is turning bullish, so we might get a small bull rally as with the rest of the market, but as it start heading towards 150, it's not going to sustain that in the bear market. Moving on to Airbnb. Now Airbnb has this rising wedge formation, and as you guys can see here, this bear flag got a beautiful breakdown from 109 with a gap to fill, and now we bounce back again from the 92 reaching towards the 100. And what I expect it to do is like it will fill this gap heading towards this resistance of this flag, lower trend line resistance of this flag, and get rejection from that level, going to make another lower low. Next one is AMD. On bounce, expect a move towards 88.90 at 95, somewhere around here. It has a huge resistance to break through, so expect a rejection from the AMD if it reached to that level. Please note that AMD has more room left towards the downside, and it may come down close to 60 around this level. Next one is CME Group. CME Group has a nice rising wedge formation. If it breaks down, then it can quickly move towards 195, 193 first, right over here at retesting 0.618. But if we couldn't hold that level, then the next level to watch for is 185. Next one is CrowdStrike. Similar to CME, we have this nice bear flag formation, and the way it's moving, I think it will go and retest this 173 level, and possibly if the market conditions are good, then probably it can push even a little bit further towards 190, towards this upper resistance of this flag, and get rejection from there, coming down retest, and if it breaks there, then it can quickly come down to 150, 140, and then 130. Next one is Dollar General. Dollar General is flagging nicely right over here, but there is the one catch, like how you can say it's a bull flag or bear flag, because right now it's in consolidation zone. So we need to watch for, if we look at the bigger picture, this is a pole, this is a flag, it looks like a bull flag, but if you look closely over here or this part, this is a pole and it's kind of like consolidating. Probably it will break down even further. If it breaks down, then 218 level is the level to watch for. If it broke that level, then we will quickly come down, fill this gap, and bounce back up from there. Next one is a Dollar Tree. Has a nice bull flag setup similar to Dollar General. It has that flag, but here that bull flag is kind of like a more defined. I'm expecting to get a bounce from this level where it barely touched this gap fill and rejected from there, so it can move up towards 157, where it can meet this prior support turning into resistance, and from that point it will get rejected, probably fill this gap halfway through, and before making any further moves. FedEx, beautiful rejection from 0.38 to level, and below 225 it can quickly go to 200, so just keep an eye on this one. This could be a good play, but it will take some time, so it's not going to make that move in one day. Meta platform or Facebook, looking for a nice reversal. Expect at least retest of 172, where it will meet heavy resistance and probably come back down again, breaking this 160 support and heading towards 150. Microsoft, a nice reversal from the downtrend. Stochastic is turning bullish, RSI is turning bullish again, and what I'm expecting it to do is like it will make this move towards this 255 first, and after that it may make another move towards 260, but even after that, after 260, then that will be over exaggerated, and you should be cautious at that point, because obviously we are in the bear market and we can quickly come down. While coming down, check this level of 255 where it might hover before breaking down even further. And the last but not least is our Netflix, constantly beaten down stocks, has a huge gaps to fill going towards 520. I'm not sure that we will see that level ever again, in Netflix lifetime. But right now we have this nice pole and a flag. So this is a bear flag. We already broke it down, got a bounce back from that level. So what I'm expecting it to do is like it will come back towards this lower trend line resistance of this flag, retest it and break it down again. So levels to watch for are somewhere around 185, 186, and even after that, if it continues moving towards the north, then 197 is the level to watch. After that it will break down and come back down again. So there you have it. Another video wrapped up. So I covered all the major stocks, which has like a kind of like a good setup, but most of the stocks and most of the indices are showing this typical type of setup where stochastic is turning bullish and it's carrying some bullish momentum, but considering the market condition, I don't think so it will last more than few days. So be very careful if you are swinging some calls. If you get your calls in the money, just take the profit and run in opposite direction. Thank you for watching and see you again in next video. Bye.